What's up, Steve here. Thank you so much for being here today. I greatly appreciate your time and I hope you are doing well. Before I get into this article, it's a really good article regarding Goldman Sachs backed ventures. They basically made a big acquisition in the state of Florida, buying up an entire community. And I'm going to talk about how that is how we're possibly contributing to that, and we're contributing to maybe overvaluation as well. So we're going to get into details on that. Hopefully my chat is working this time, so if it is, shoot me a chat. If not, I got my phone nearby, so maybe I can read off of there. Before we get into this, I just want to talk about a story. The last real estate recession, for those who don't know, I'm a broker, real estate broker here in Florida. And we bought a property, an investment property in an area called Lehigh Acres. Now, Lehigh Acres became literally ground zero for the housing crash because there was just an abundant amount of building going on there. And it's all single family home purchases in pretty much non-gated communities. So in Lehigh, we had this house. I forget what we picked it up for. We overpaid for it at the time. I think we paid like 160 grand. And we had it, we fixed it up and we had it rented out. And man, I don't know what's up with this chat thing going on. So we basically had it rented out. And at the time, we had it rented out for about $1,500. And then the recession was looming and people were losing their jobs. People were moving out of Florida. That's right. People actually do move out of Florida. And our rent rates went down. So the tenants that we had, they moved out. And then we were trying to get a new tenant in place. It was a nice single family home. And we were previously getting $1,500. Now we struggled to get $1,000. Okay. And then we got to a point where the tenant in there, she couldn't afford the $1,000 a month anymore. Awesome. I see the chat's working fine. Thank you, Anna. So she was basically like, can you work with us? And she got sick and everything. So we were like, yeah, for sure. We'll work with you. But I did look at the open market to see what things were renting for. And they were all renting for like $700 to $800 a month. So the reason why I'm bringing this story up, because I think there's a lot of validity to it. And it's because people across the board say rent rates will not come down. Now, we've seen rent rates increase incredibly over the last couple of years, and it's shameful. It's harmful to the economy and everything else. So at that time, the real estate market was just going down, and we had to pivot in our real estate business. And one of the things that actually helped us to survive was a division of our real estate company that my sister headed up, which was property management. If we didn't have property management, it would have been tough to keep our doors open. I'll tell you that. But the thing is, the rent rates. So what was happening is we had more and more investors putting their properties with us. They couldn't sell their properties because they were completely upside down. So the only other option, and we had a lot of people that just, they were doing some speculation, trying to buy and flip or buy pre-construction and flip. And what happened was they couldn't sell because they're completely upside down. So they listed with us, with my sister, and we had these properties available for rent, but rent rates went down on those properties across the board. So on a regular basis, we were dropping rent rates that were active on the market. If they were active on the market for more than 2 or 3 weeks, we would drop by $100, $200, $300 a month, because that's just what the market was. There was an oversupply of rentals. Now, as I drove around and as I recall back during that time, there were a bunch of apartment complexes as well, all losing their asses. And you guys probably saw this in your neighborhood. You got to reflect back to 08, 09, maybe 2010. But you would see signs out front of these big apartment complexes. Some were virtually brand new with balloons and everything else. And you would see 2 months free rent, 3 months free rent. And that was happening. And it was because there was an oversupply of rentals that came on the market. And prior to everybody is like, rent rates are going to continue going up, real estate's going to continue going up. And I can tell you, obviously, our real estate market is different. And I press that all the time. I agree. We have a different real estate market. I honestly think that things are going to be even far worse. But rent rates can come down. So don't be fooled. And I told people, I think this is even before I started YouTube, that and before the pandemic and everything else, that people need to be very cautious on rent rates as well, because if they do come down, that completely conflicts with what you're planning on for gross income if you're renting the properties out. All right, let's get to it. So Goldman Sachs backed firms buys entire Florida community for $45 million. All right, and this is not the only one that they are buying entire communities. This community is a single family home community in Brevard. But it goes on to say the ventures gobbled up an entire rental community in Florida last month for $45 million, according to reports. Fundrise and Growth E-REIT V2, that's basically the fund name, because a lot of these REITs, real estate investment trust, they have multiple funds. So they package up all these properties. And when they think that that fund is pretty much the size that they want it, then they're going to jump and create a new fund. So anyway, they picked up 87 single family homes or single family properties in Brevard County as an ongoing southern spending spree. Now, let's just take 45 million real quick and divide that by 87. That's $517,000 per house. Now, I didn't do research in terms of what these houses look like or anything like that. I'm sure they're probably newer and nicer, but $517,000 per house is basically what they paid for each individual house. Goes on to say Fundrise previously snatched up a 120 unit development in Pensacola and has been pouring money into other rental developments in states like South Carolina and Mississippi, with rents continuing to soar and demographic shifts ongoing. Real estate experts say Wall Street's southern appetite will only intensify. All right, so now it says Goldman Sachs back. So basically, Goldman Sachs is funding. So these REITs are coming in and they're raising money from individuals like you and me and pension funds, okay? And they're raising money and they're taking this money and they're essentially using it as a down payment. And then they're going to like a company like Goldman Sachs and they're getting financing to buy these big ass communities or overpay for some of these communities. Now, a lot of people don't understand is I can guarantee, maybe not guarantee, but I guarantee, I hate to say guarantee, but I bet you the rates are floating, meaning they're adjustable. And with everything going on right now with inflation and the cost of money increasing, I suspect that a lot of these REITs that are taking on very risky debt, are going to get into trouble. And the thing is, people look at Wall Street, okay, and they look at these very successful firms. And they're like, these guys, they're extremely successful. They can't fail. They're too big to fail. They're taking our money and they're growing our money. They're very trustworthy and so on. But the problem is there's a lot of greed on Wall Street. There's a lot of manipulation. So let's talk about something for a second. For one thing, these REITs, Fundrise is all over YouTube. I mean, there's a lot of YouTubers out there that are like, click the link below and they get affiliate commission or whatever the case is. And smaller investors are able to get into these REITs for very little money. But the thing is, it's some cases, it's all the money that they have. And then you have other investors that just don't want to deal with the headaches day to day of owning real estate. So they're relying on a company like a REIT to go ahead and basically invest their money, and they're trusting these companies to invest their money wisely. And I think that some people will definitely make some money, especially when they are in a cash out position, and hopefully that there's an equity position when they do eventually sell. But the problem is, I see that a lot of these companies are taking on very scary debt and they're jeopardizing your money that you're investing into REITs. And now I just read a report today. More than 60% of pension funds and endowments have REITs as part of their real estate strategy. And I know that pension funds have historically always had a certain level of REITs and real estate in their strategy. And now endowments are like charitable organizations or non-for-profit. Okay. So I did another video. You can find it somewhere on my channel where I read Robert Kiyosaki's book. I can't talk today for nothing. Robert Kiyosaki's book, and it was called Who Stole My Pension? If you guys have read it, just comment for me, because it's an eye opener. But basically, Robert Kiyosaki was hired multiple times by multiple pension systems to do forensic audits. Okay, because he knew that people's pensions, their livelihood was being robbed. Okay, and I'm talking big companies. Okay, scary, where people they're nearing retirement and they're thinking they're going to get $3,000 a month until the day that they die. And it's just unfortunate, but it's not happening because pensions are getting robbed. So how are they getting robbed? So they come to a person like financial planner Joe. And I'm not a financial advisor, planner, or whatever the case is, just giving my opinion and some experience in being in real estate. Anyway, the financial planner, Jim or Joe, he approaches a pension fund and he goes, look, you guys need to make a certain level of return to keep up with the amount of money that you have to pay out to people that are retired right now. And unfortunately, they've been previously robbed. So they have to make even a bigger return every single month. So what happens is they get into very risky assets. And what additionally is happening is, and not all of these guys are dirtbags, but there's a lot of them. That guy, Jim or Joe, he's like, well, I can get you into this really risky asset over here. Like, say it's a really risky REIT. And he sells it to the pension fund. But what a lot of people don't understand with the pension funds is these financial planners, they're non-fiduciary. Man, that word is tough. Fiduciary, okay, meaning that they don't have to disclose how much money that they're making. They don't have to disclose the fees that they charge. So the more risky the asset is or the investment is, the more that they're going to get paid on the front end. So historically, a lot of these hedge funds or pension funds have been utilizing, a lot of these dirtbags that have been just getting them into risky assets. Those risky assets implode. And then, the pension system is left with, less money in their pocket to pay out to retirees. And if you don't believe me, read his book, but also just Google pensions that have failed or corporate pensions that have failed. And, there's certain airline companies that had to completely do restructuring, where I read one story, this lady was relying on, I think, $2,800 a month in retirement. And they're like, if we'll go out of business and you're going to get nothing, or we can restructure and you have to agree to this, but now your new pension is $400 a month. And it's sad. And I don't know if I'm trying to predict the future here or what, but I think that some of these REITs are going to be overextended in real estate. And I think that they're gonna get in trouble, a lot of trouble, especially when you're spending over $500,000 per single family home. And it goes back to the original part of the story here is rent rates can fluctuate and they can go down. Couple other things that I want to address right now too is Bernanke. He was the Fed chairman from 2006 to 2014. He's got a new book, so he's coming out and he's on all the news shows and everything else. And he's talking about the current Fed chairman, Powell, as well as the Fed in general, and how they made a mistake because they were slow to combat inflation, slow to increase rates, right? Now, this guy, if you look at some of his, and if you guys, I don't know if you follow Economic Ninja, really, he's got a great channel, and I was watching it earlier today, which sparked in my head, but he played on his phone a clip from 2006 on, I think, CNBC or something. And he goes on to say, and again, he's at the time, the Fed chairman, and he's like, basically, he was saying how strong the economy, this is 2006, this is when everything is crumbling, but people don't even realize it. How strong the economy is, how strong the job market is, and how stable real estate is with low interest rates. And word for word. And you guys can look it up, and I'll try to link it if I can. If I can get back on this video, I'll link it below, see if I can find that video. But it's just funny how he can come out talking shit, and he's all about just trying to sell a book right now. But that guy put us in a bad situation as well. So I don't even think that they should even allow him on TV. But anyway, I think that when we have, if you look at what's going on, the stocks and crypto right now, when you have a lot of hype and you have a lot of speculation and you have a lot of fear in the market and fear of like missing out, especially with crypto, I know people have been losing their asses in crypto when everybody is saying that, if they were invested, like, oh, this is the new currency. It's never going to go down or whatever. And unfortunately, and you guys can comment below, but I know a lot of people that lost a bunch of wealth in crypto right now. And, time will tell. But I don't think that real estate is any different. I think that especially when we have Wall Street heavily invested into real estate, not just, commercial real estate is one thing, but for single family homes where people need homes and they're coming in and they're basically utilizing it as a gambling piece, I think it's a recipe for a disaster. I truly do. And I think people give Wall Street too much credit where they're like, so for example, like Lehman Brothers, that just came out of nowhere, right? And I don't even know when they were founded. It was like the late 1800s, early 1900s. So point I'm making is you really got to look out for yourself with what you have, what you're doing with money, and don't rely on other people. And these REITs, I think a lot of them came out in the beginning years ago, and they meant well because they were set to help people grow their wealth through real estate without dealing with the headaches in real estate. But I think a lot of them are getting way too greedy. And I think a lot of them are getting paid on the front end. How that works, I'm not too sure, but I believe that a lot of these REITs are going to be affected. And if we'll start to see, I bet you, some liquidation events go on where these REITs are realizing, okay, the market's shifting. We were relying on these $500,000 homes of getting, $2,800 a month. Now the market's starting to dip down and more inventory is coming to market. Now we're only getting $2,600 a month. Oh, by the way, Powell just increased another 50, 75 basis points to combat inflation. Now the cost of money is even higher. And then a lot of REITs and a lot of funds, just generally speaking, they if the return on investment gets to a certain point and too low, real estate's risky. Real estate's a lot of work. It's a ton of work. So if that return goes to a certain baseline or below it, they're going to say, why don't we jump out of this and go into something safer like corporate bonds or something. So I don't know when that would happen, but I think that eventually it will happen. And I would like to reflect back on this video at some point in time. And lastly, because I do want to get to some of your questions or comments or whatever, if you guys have comments and want to talk about it, let's talk about it. The too big to fail, traditionally, the government is going to bail them out, whatever kind of institution or type it is. There's not going to be any accountability. This same cycle happens over and over and over. So the government bails out, but who's on the hook? It's the taxpayer. It's you. You are going to pay. You're currently paying. You're even paying for student debt right now, even if you didn't go to college. You're paying for it. And that's an inflated bubble in itself. I got another video on that too, in terms of student debt and the crisis that's going on with that. So that's a bailout. But be very careful with your banking institutions as well, because there's something called a bail-in. And basically a bail-in, and there's not many people talking about it right now, but basically if shit hits the fan and a bank doesn't have the ability to pay its bills, they can do what's called a bail-in, and they can utilize creditors' deposits. So your money, my money, they can go in with their sneaky little hands and pull money out and pay their bills to ensure solvency. And basically, solvency is being able to, if you're insolvent, that means you don't make enough money to pay your bills. So be careful with that. I did another video pertaining to banking institutions and credit unions. I would, if you got a bunch of money because you guys are selling maybe at the peak of the real estate market and you're taking cash and putting it away. Again, I'm not a financial advisor, but me personally, I'm diversifying amongst a lot of banks right now and credit unions. So just be careful of the bail-in, because I think it's coming. So anyway, I don't want to be the problem, so I'm not investing in any REITs currently. That's just my own thing, my own opinion, but a lot of people are. And, the money comes from somewhere. And, a lot of people are saying these institutional investors, they're never going to stop. But there will be a stopping point, and the money comes from somewhere. And a lot of times it's other people's money, whether it's taking the money and utilizing that as a down payment and or utilizing the bank, or a combination of both. It's traditionally other people's money. All right, let's jump into here. Again, thank you guys. Thank you for being here today. I really appreciate it. Normally I want to do these on Wednesdays, but I got to fly out to Bama. My nephew is graduating from high school. And also, let me know in the comments, do you like these live streams? Do you want more of them? Because I was thinking about doing maybe 2 or 3 a week, just based on any kind of articles or anything I find interesting pertaining to real estate. JC, I lost 2 tenants last month. I might lower rents this time around. I want to be the best deal if there's a recession looming. That's exactly what at the time we were telling our landlords. We were, even our personal stuff that we had, we were undercutting the market because we saw what was happening and the just decline in rent rates. When no one rents or buys, it will self-correct. I agree with that too. I think rent rates are freaking insane. And I think people are going to really start to say, you know what? Screw this. I'm not paying $3,000 a month. Let me dug out my parents' basement for a year or whatever and just chill and save money and see what happens. And our market's shifting. I mean, not all markets are the same, obviously, but we're the market's shifting for sure. Hi, D. Trent. Frashent collapse with May 2022. I don't know, man. I don't know. D. Trent, they're going to lose their shirts if they have to dump for any reason. Yeah, I agree. Just for sure. Kiyosaki made one good book and now he's a successful con man. I don't know. Rich Dad Poor Dad was a very influential book in my opinion. I mean, I think I preach the same message is, to sum up that book, invest in assets and not liabilities. And I think that it's a good message because we're not taught financial intelligence in our schools or even colleges for that matter. And that's why I think, over 70% of people in the United States are paycheck to paycheck. So I think anybody that can put out books or YouTube videos on financial freedom and financial intelligence is a good thing. Amanda, what's up, Steve? Always like and catch your lives. I appreciate it, Amanda. Love your show, Steve. FY Oreste Toko. Sorry if I'm butchering that. Blackstone just opened an office here in Toronto. Everyone's scratching their heads. Yeah, I heard the Toronto market is starting to turn. Am I right on that? How can first-time home buyers find property when the homes are being swallowed up by REITs and investors? I hear you, Letitia. I'm of the waiting game. Also with Blackstone, if you don't know, we worked with them for about an 8-month, 10-month period, and we This is back in 20, I'm gonna say 14. And it was I need to do another video on this and talk about exactly the whole process of working with Blackstone and the different funds that they set up and their criteria for what they were buying. It was interesting process. I think I was part of the problem, but didn't matter. Whatever they were going to do, they were going to buy as many properties, but they were buying properties through us 2014 at really good prices. So at this point in time, I don't see being very good prices for sure. Anyway, guys, thank you. It's about 25 minutes too right now. So I appreciate your time today. And I got a video coming out tonight at 6. I forget. I think it's on an article pertaining to Berkshire Hathaway losing money on their real estate side of things. So check that out, and I will see you guys there. Thanks for being here.